Yo, what's up, everybody? Hopefully, everybody is doing okay and amazing. It's on a Tuesday, all day, every day, as usual. We're here again to do our thing. So, today we'll be looking also the price action for DXY. As you know, I've been looking of late on the DXY and doing my trading on the Euro USD, whereby I just take the opposite trade to DXY, meaning if I'm buying DXY, then definitely I will be selling uh, Euro USD, because majorly I'm trading Euro USD. So whatever I'll be talking here uh, is the opposite to what Euro USD will be doing. To those who are trading, I guess you know these, and because they are uh, oppositely correlated, yeah, negatively correlated, in other words. So let's review over here. So I'll start from the higher time frame, which is the daily time frame, and let you know how I did come up with this trade idea. So one thing I had observed in the daily time frame is we had already created this immediate rebalance, whereby today's candle rallied lower, overlap with this Friday's high, creating an overlap. As you can see, these candles high and these candles low, they have overlapped from these wicks, these candles, this lower wick with these candles higher wick. We can see they have overlapped. We have no fair value gap that has been created inside the 4-hour time frame. That's when I noticed we have all these down close candles, which to me are an order block. So you can see the highest high over here. We have all these down close candles, which are these the highest point of this order block, and these are the lowest point of this order block. So I drew this line. Then we also have this other proportion block, meaning it's an order block after another order block. So I was monitoring also these 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 down close candle here, which is our proportion block. So from the 4-hour time frame, because I've already noted these 4-hour order block, so I dropped to the 15 minutes time frame straight to get now the to see whether the market maker buy model will present itself. So what happened, as we can see here inside the uh, lower time frame, which is the 15 minutes time frame, you can see the market, how it did deep into this 4-hour order block, which is my number one key level. So it was a key level, or a reversal point, from which I was expecting to see price reverse from, because you can see we have this sell model here, and inside this level, inside this 4-hour order block, this is the level I was watching to see whether I can see a reversal. And since we were in the New York kill zone, so from 7 a.m., yeah, that candle to around 12, to around 12, so this our trading session. So we were in our trading zone, or our kill zone, which is the New York session, and we are inside this key level, this for our order block. Now we want to see formation of a market maker sell model, whereby we want to see whether we have sell liquidities being grabbed, whether we are forming bullish arrays which are being respected, and also seeing bearish arrays being violated, and also a market structure shift, because that's majorly what I usually trade, market maker X model. And for this example for today, it was a buy model for the DXY, but sell model for Euro USD, of course, because their DXY and Euro USD are negatively correlated. So inside these kill zone over here, so number one, we have the timing, which is a New York time, number one tick, because mostly I have my how do I call it, my watch list. Number one, what I usually look for first is ensure that I'm inside my kill zone. So kill zone, which is the timing part. So on these, I got I saw this play because we are inside New York kill zone. Then we have number two, which is the key level. The key level, which for me is this for our order block, which you can see it over here. So key level, we have it a tick. Then we want to see a liquidity sweep. So inside this 5 minutes time frame, what you can see over here, we have the market rallying lower. You can see how this low was formed, the market rallied higher. And from my previous videos, if you've been watching them, you could realize I've been telling that the first move is usually a fake move. So for this instance, those who were early to enter here, they were taken out before then the market rallied higher. So this low was created, then sell side liquidity was taken there. Those who are first to enter, dipping into this key level, and then we can see how it rallied higher. It rallied higher, creating these market structure shift, whereby we have these candles closing above this previous swing high, and that it's this low after this low had been engaged. So to me, this is a market structure shift. So I've confirmed three things: key level, sell side liquidity grab, and then we have this market structure shift inside the 5 minutes. Then inside the 15 minutes, what I observed is we have this fair value gap that has been formed. You can see from this candle's high to this candle's low, we have this fair value gap, and that's where I based um, my my entry. That was my entry level, and this entry level was also aligned with this 1 hour immediate rebalance. You can see over here we have this candles high. I placed these, you can see a thin pink line over here. You can see over here this candles high, we have this thin pink line over here. That's the 1 hour immediate rebalance that I was watching, and that line that 1 hour immediate rebalance over here was well aligned with this 15 minutes fair value gap. So that was my entry level. Then I was targeting a 1 to 2 as usual, 1 to 2, which was above this high. So this was my buy side liquidity target, and as you can see, my stop loss was just below this rejection block here, and also below this bullish array, which is this order block. Right, we have this order block that was created. You can see the market dipped into this order block, then we had this slow movement high onto our targets. So as I was telling you before, is my trading plan, or my plan is usually I want to see inside a kill zone. We have a key level over here, which is this 4 hour. In this example, we have sell liquidity grab, then we have a market structure shift. Then I want to see if we are in a bullish market. I want to see bullish arrays being formed, and then these arrays are being respected. So for this instance, we have this down close candle that has been fully engulfed by these two candles over here. So to me, this is a bullish order block. the market tapped into it, you can see how this order block was respected, and the market consolidated, moving slowly until our targets were reached. Also, we have this fair value gap that was formed over here. You can see this candle closed below the fair value gap, but again this other candle respected these by closing above this fair value gap. So this is also another bullish array that has been respected. Also, I want to see bearish arrays that were being formed being disrespected. For instance, we want to see these order block, these two up close candles, which to me we are inside a bearish market, so these up close candles should resist higher prices, but you can see they were violated by these candles closing above this. So over here they can be used as mitigation blocks. So to those who use mitigation block, these were nice trading buying opportunity for DXY. So you can use these mitigation block and then buy. So that was it for this video. I guess I've explained with my, I think I'll label that later on. And yeah, my stop loss was basically based on this rejection block below, this 15 minutes rejection block below the order block. So that's where I placed my stop loss, and of course my target was a 1 to 2, which was later on hit. The market then rallied lower, but you can see again it's running higher, but it's not inside a key level or a key kill zone. So we'll let it be. Our targets have been hit. So that is it for this video. Thank you for watching. Until next time, guys. Bye bye.